A Random Walk Down Wall Street by Burton Malkiel is a classic investment book that explores various investment strategies and provides insights into the world of finance. The title itself, A Random Walk, refers to the idea that stock prices move randomly and are unpredictable. Malkiel presents a comprehensive overview of different investment approaches, from traditional methods to more modern theories. The book begins by introducing the concept of the efficient market hypothesis, EMH, which suggests that stock prices already reflect all available information. According to EMH, it's impossible to consistently achieve higher-than-average returns by analyzing information that is already known to the market. Malkiel emphasizes the challenges of market timing, the practice of trying to buy and sell stocks based on predictions of future price movements. He argues that attempting to time the market is a futile endeavor, as it's nearly impossible to consistently predict short-term fluctuations. Instead, he advocates for a long-term buy-and-hold strategy for individual investors. The author discusses the merits of different investment vehicles, including stocks, bonds, and mutual funds. He stresses the importance of diversification, the strategy of spreading investments across different asset classes to reduce risk. Malkiel also introduces the concept of a lazy portfolio, a simple, well-diversified investment strategy that requires minimal effort to maintain. One key aspect of the book is the exploration of various investment instruments, such as index funds. Malkiel is a strong proponent of index investing, which involves investing in a broad market index like the S&P 500 rather than trying to pick individual stocks. He argues that index funds provide a cost-effective way for investors to gain exposure to the overall market without the risk associated with individual stock selection. The book also delves into behavioral finance, a field that examines how psychological factors influence investor behavior. Malkiel discusses common psychological biases that can lead to poor investment decisions, such as overconfidence, the tendency to believe one's judgments are better than they actually are. He also addresses the impact of emotions on investment choices and how fear and greed can lead to irrational decision-making. Malkiel covers the role of financial advisors and highlights the importance of understanding fees and expenses associated with investment products. He provides guidance on how to select a financial advisor and emphasizes the need for transparency in financial transactions. In later chapters, Malkiel explores more advanced topics, including technical analysis and fundamental analysis. While acknowledging these approaches, he remains skeptical of their ability to consistently outperform the market. He argues that the efficient market largely incorporates relevant information, making it challenging for investors to gain a consistent edge through these methods. The book concludes with insights into the global financial landscape and the impact of geopolitical events on markets. Malkiel underscores the importance of a globally diversified portfolio and how investors should consider international markets in their investment strategy. In summary, A Random Walk Down Wall Street provides a well-rounded and accessible overview of investment strategies. Malkiel's key takeaway is that, in the face of market randomness, investors are better off adopting a diversified, long-term approach rather than attempting to time the market or beat it through complex strategies. The book remains a valuable resource for both novice and experienced investors seeking a solid foundation in financial principles. So, guys, thank you so much for watching this video. You can get the book from the given link in comment section or description. Please like, share, and subscribe. Thank you, and bye-bye.